Aloha, this is Joshua Hayes at BigWaveTrading.com coming to you with October 21st market wrap-up for you to use for the October 22nd market. Whenever we look at the stock market today, we can see that it was, I guess it's a bearish session, but really it was an inside day on the S&P 500. If you look here, you'll notice that the low of the day is higher than the low of the day yesterday, and the high of the day is lower than the high of the day yesterday. That's an inside range on the S&P 500. Let me look at the Dow Jones Industrial Average when it pops up here. Almost an inside range. And for the NASDAQ, that I do believe was on the outside. Yeah, it's a down day. Let's look at the S&P 500 really quick. As you can see, we did not follow through at all to yesterday's price gains. Pulling back a little bit. Volume was a little bit below the volume the day before, which means it's a okay pullback. Like, it's nothing too bearish right now, but still the price is still well below the 50-day moving average and 200-day moving average, and it's still not safe to be long stocks yet. I did go long a new stock yesterday, and it went up today. And in fact, it went up today 3.21% while the market pulled back 3%. So on a relative strength performance day today, I beat the market by 6% with the new long that I took. That was some quality stock. But let's go on to the Dow Jones 30, and as you'll see, you have the same exact thing. You have the price. When it comes up, I don't know what's taking my TC charts forever right now, but look at all the red bop. That just shows that there's systematic selling on the indexes. It really isn't that important with these big caps. But actually, to actually have red bop show up in this index is pretty negative. But after all of the heavy distribution in October, you can see that the up days that occurred on 10/13 and 10/16 came on accumulation that was much weaker than all the distribution, and that can be seen in this weekly chart. Big red bar, 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 big red bar. Granted, the tails are a bit more bullish on the short term, but they're still closing lower, so it's still nothing to be too bullish about. There should be nobody at all with an intermediate to long-term time frame that should be bullish here. If you flip stocks 1 to 2 to 3 days, personally, I could care less how much you gain in the past 3 days because I know the gains will not hold. And even if they do hold, whatever stocks you are long are not going to go up 100, 200, 500 to 1,000%. Anybody that's long stocks right now are long laggards. Stocks that will not hit their old highs ever again. Apple, Research in Motion, whatever you're long that was an old winner, it's not going to come back. So trade however you want to trade. I don't care about people that trade for 1, 2, 3 days. After 13 years of stock market experience, don't you think I would have switched to that methodology if it could have produced bigger returns? But I'm sorry. In 2003, when I have multiple 500% and 1,000% winners, same thing as in 1999, and the same thing that will happen in the next bull market that I will be going long, I tell you what, you guys aren't going to be able to touch me with the returns of any of you people that are trading for 1 to 2, 3 days. Oh, you can make money on it. Apple goes from 92 to 103. The big freaking deal. Is it going to hold 103? Do you think it's going to hold those levels? It's still so far underneath the 50 and 200-day moving average that you still have huge resistance over at 135 and huge resistance at 160. Unless this stock was going to go to 200, I'm not interested in it. I look to at least double my money on every trade. The new long I took yesterday, I expect it to double. I expect a 100% return within 2, 3, 1 months or 6 months, a year. I don't care, but I expect big returns. If it fails, it fails, and I cut my loss. But let's just go ahead and move on to the other indexes. I actually do want to show you a negative index. The NASDAQ 100 was down 5.13% today, giving up the gains from yesterday. The same thing happened on the NASDAQ as it lost most of the gains from yesterday. Intraday low was 1698 and it closed at 1696. So that means it took out the lows of the day yesterday just like the 100. And look at the volume. Even though it is below the 50-day volume average, it is still higher than the day before, which means more people were looking to sell stocks after the lame rally yesterday. And then just to continue to look at this, look at the downtrend October, big red bar, very big red bar, very big, very big, very big. And then strong accumulation here, weak follow through to that accumulation, and then on the follow through day, the volume is big, but still below these two big sell days. So there's nothing extremely bullish here. If this was 2003 or 2002, these big red bars right here would be as big as these red bars here. And this is the kind of volume on the down days you would see. They would always be under the 50-day volume average. And then you would have big green bars. And then you would have a lot of good-looking charts that look like the stock that I went long yesterday after a 13% gain, getting another 3.2% on it today. So I like breakouts from nice, beautiful, heavy accumulated and low volume in the actual cup part of the base. If there's low volume on the pullbacks and low volume at the bottom of the base, and then a lot of accumulation on the right side as it moves up the chart and then breaks out, that's the stock I want to be long, especially if BOP goes max green, like the stock that I went long yesterday went today. And if you talk to my subscribers, which the free people would know, I told them that BOP would go max green on this stock at the pace that it's on, because it jumped to green BOP yesterday at a very high level, and then it jumped to max green BOP today. Relative strength line's incredible. It's just a great stock, and I tell you what, no matter what, that stock that I have right now has a potential to easily double. None of the longs people are buying here that are below the 50-200-day moving average have a chance at all at doubling in the next year. If you don't know why, it's because history has proven stocks in a downtrend stay in a downtrend. So right now, all these people that are buying stocks and so happy that markets bounced 3 days, what are they going to do 2 weeks from now whenever we roll over and hit new lows? And if we don't, my long that I took and the subsequent longs that'll show up will outperform the longs you've taken now. So crazy people like Sandy Wright can try to throw me off my game all they want. I know that I'm out here to help you, and my analysis has none of my opinions in it. These are all facts gained from the past 100 years, looking at the top 100 stocks each year from 1900 all the way to 2008. IBD did a study. John Boyk has done a study by looking at the greatest traders of all time and how legendary traders made millions. And I've done my own research, and I know what works. I know how you get the big winners. Study my 1999 and 2003 charts. Look at how much max green BOP, tons of accumulation, and beautiful flat tight price patterns, like a cup with handle cup, or a saucer with handle, or just a saucer, or a double bottom base, or a high tight flag, or a flat base, or a triangle base even. All of these work in a bull market. And even in a bear market, we're learning if the chart's bullish enough, like the long I took yesterday, they can still work where the indexes are in a downtrend. Let's just look at the VIX really quick and just see that it's come off. It's still at 53, so it's nice and high. It means we can still make big money. But you know what? I still don't think we've seen a low in this market, especially with the nut jobs that I'm getting questions from right now. I've had to close down comments, and I'm keeping them closed on the free section for 3 months. Silver, gold, and platinum, of course you guys can always talk to me. I don't mind. But if you're not a subscriber, I am not interested in taking any more flack from fools who completely just ignore my excellent track record on the long and short side. Just in the comments last week, I posted the returns on my shorts. And then some guys like, I don't see how you could have profits. Well, when you go short in July, August, and September and hold it through one of the biggest bear markets that we've had since 2002, you make a lot of money. I don't understand this day trading crap, and I don't understand this 1 to 3 day swing holds. I'm in it for the big money. I like long-term capital tax and not short term. So, you know, the longer I can hold something like my MasterCard long that went up 400 to 500% for about 2.5 years, or my IHS holding that was almost 3 years long that was up 250%, that's what I like. Those are the kind of longs that I cherish. Now, I got to check to see how much time I have. I might have to wrap this up. Yeah, I'm going to go ahead and wrap this up. But I showed you there's a distribution day today on the NASDAQ, and seeing a distribution day that quickly after follow-through day is never good. The lack of pretty charts is a negative thing. I do have one beauty, but there's no way I'm giving away for free, especially the way people have been talking to me recently. So this is Joshua Hayes from BigWaveTrading.com, making lots of money. Aloha.